Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is April 22nd, 2020. Again, to all of our clients, friends, and family out there, we enjoy and thank you and so grateful for the continued support. We got a lot of incoming emails and a lot of shares on all social media platforms with friends and family. We encourage you to do that because our main goal here is through this new normal, if you will, is communication. Communication is so vital, and our job is to keep you guys informed. So enjoy today's episode. So the first topic I want to talk about, I want to put into context the markets versus the economy. The economy, economically speaking, we're going to see tomorrow afternoon probably our unemployment rate skyrocket once again. If you think about it, in the last 4 weeks, we've had 22 million Americans claim unemployment. The 4 weeks previous to those 4 weeks that I just gave you those numbers, we only had 1 million actually claim unemployment. So basically, we will see after tomorrow probably 15, by the time we're done, maybe 20% unemployment in the United States, which is absolutely just tragic, especially in such a short period of time. But why are the markets so disconnected from the economy? And I hope to answer that question right now for you. So to understand this a little bit better, what I've done is you take the 150 million non-farm payrolls jobs that are in the United States, and we break that down. And this is an oversimplification, but it really should sum up the story. So about 50% of the jobs in America are with large or mega companies. So the largest S&P 500 companies, if you will. Then you have mid-size and small companies, okay? So small and even small cap. And then you go, that's in the publicly traded markets, but then you also have, in addition, you also have in this larger number, all of the mom and pop shops in America. You know, you have the local restaurants and the local stores and all the things that we're so familiar with that we miss so much, that we want to reopen and go again and support again. And that's really the key take-home point is when we reopen, whenever that is, and it'll be hopefully sooner than later, the key is to shop locally, support locally. The large companies will continue to get larger, okay? And that's just the nature of the economic engine. That's why the markets themselves are supporting, because the market, as represented by the S&P 500, is a representative of the largest companies in the United States, okay? So if you think about it from that perspective, that's only representing those that are actually doing quite well. And to prove this point, let me go into the year-to-date performance of the large companies versus the mid-sized companies versus the small cap companies and how they performed year-to-date. So to prove this point even further, we'll look at the year-to-date performance, large, medium, and small, and how they've performed based upon their indices. The S&P 500 as of the 21st of April was down about 13% year to date, okay? On the other side of that, you're looking at 26% for mid-sized companies and down 31% for small companies. Again, this also represents a microcosm of what's happening in America. You're seeing the government assistance program, the PPP, and you're seeing big companies rush in. And in fact, none of these companies should be actually asking for that because they have access to the public markets and they can go to the public markets and sell equity. They have a bunch of different ways of actually accessing credit and capital by the public markets. That's the function of the capital markets. And you're seeing some companies actually do that quite strategically and thoughtfully, and they're lucky to have that access to public markets to be able to raise some short-term cash to be able to meet their short-term obligations and keep employees engaged as we get through this. But through the PPP and all the Small Business Association, what we're also seeing is some challenges. Some of the banks are processing applications and they're not processing them for smaller companies, and they're not doing it in a quite just a rapid fashion. The reason why this is, I mean, the dirty little truth is that if you get an application and you're in the bank and it's the same amount of paperwork to process a larger loan because they get compensated on processing these loans than it is to do 10 or 20 little loans. I mean, that's my personal take. It's my personal opinion. I kind of see the frustration. I serve small business owners, so we're going through this process right now. But I will tell you, inside a bank, it's probably easier to process one loan, a larger size loan, and get that funded through the SBA PPP program than it is to do 10 or 20 applications. So I hope with the next round of phase 2 funding that we're going to see through the Congress, that they fix that little nuance. We also want bigger companies that have access to the capital markets, give that money back if they don't need it. There's some companies out there that actually have millions of dollars on the balance sheet right now. They don't need access to this program. I think the Treasury Department by Stephen Mnuchin has actually indicated that there's going to be some quality testing that's going to happen after the fact. So hopefully that he's going to use the honor system for everyone to return it that doesn't need it, because we ultimately need at this moment in time that capital to get in the hands of truly the mom and pop. Why? Because the large get larger, and that's what's happening on the S&P 500. That's why the markets aren't down as much as the economy is down. So there's that disconnect, and I think that's important for us to learn, or at least see through the markets, seeing through these numbers. But it still doesn't mean that we're not hurting economically speaking on a local level. So I think my take-home point to you guys is that when the economy reopens, let's keep it local. So let's take a closer look at a chart that I pulled up. It's from 2008. It really segments the have and have-nots of the S&P 500. It really dictates why we're seeing sort of larger losses in smaller companies versus mid-size versus large companies. In fact, sort of the distribution of returns, negatively speaking, year to date in the S&P 500. This chart was from 2018, so it's old, but at the end of the day, it sort of proves the same point, which is if you take the top 5 companies by market capitalization, so the top 5 most valuable companies back in 2018, you can do the same thing probably today. It would be the same result. And you add their value together, it's greater than 282 of the bottom half of the S&P 500. That's the largest companies in the United States and in the world. It's incredible to see that distribution. So what we're seeing is that rock solid balance sheets in a market like this is important. And those not only companies are the ones that are going to survive, but markets also believe that they're going to thrive when we get out of this. And it's evidenced by the distribution of returns. Okay, in Blanke Schein Wealth Management, we focus on quality. We believe that you always allocate large companies and mega-sized companies over small. So from our portfolio asset allocation standpoint, that's been a big theory and theme and part of our investing philosophy from day one for all of our clients. We also believe U.S. over international. So we've always over allocated U.S. companies, simply because we look at companies that not only will survive but thrive through this. But that's markets and investing, which is separate from the economy. So that's a very important point. I just wanted to have that very important distinction. Again, I said it before, I'll say it again. The way we get out of this in the next months and weeks ahead, when we have the ability to get out of our homes, is to support local businesses, okay? Those that are local and your local, restaurant that we're all, looking so forward to getting back to. So I think that's from an investing standpoint, there's one tale of two cities. One side, why the markets are so resilient in these times when the economy, we could see 15 to 20% unemployment, so we're so disconnected. And final point, number 3 today, happy National Earth Day. I think we just saw a report, I've got a link in there for you to see it, that they just showed Los Angeles, right now, their air quality is the best in the world. Yeah, let that sink in. So if that's not a good news for not only Los Angeles, California, and here by just everyone not traveling, at least the Earth gets to breathe on a global level. So happy Earth Day, everybody.